The data, not pretty this morning if you're looking at initial jobless claims, not encouraging if you were hoping that V-shaped bounce that we experienced in the last couple of months will continue. Tony Despirito of BlackRock weighing in on the flight to quality, writing overarching emphasis on upside participation while maintaining quality and resilience within the portfolio. Seek to own attractively priced quality franchises with good balance sheets that pay and grow their dividends. Tony joins us now. Tony, walk me through that barbell approach. The one bucket on the cyclicals to participate in the upside and the safer bucket on the other side.
Yes, exactly. We call it a barbell strategy. And, on one hand, you want to be in high quality stability businesses, particularly some of the businesses that are winning because of COVID, like the tech sector, like healthcare. So I think you definitely want to have one foot in those businesses. But at the same time, we can't, if and when we have a full recovery, which we will, some of the stocks, some of the most cyclical stocks, some of the most beaten up stocks will have to participate. I would include amongst those some of the banks, some of the energy stocks. And so I think that's going to be some upside juice as well there.
They're your contrarian calls, the financials and energy within cyclicals.
Yes.
And what I'd love your help with, Tony, and I ask this question continually, if you want to dip your toes into that area of the market, what do you avoid? And that's as important as what you choose to pick. What do you avoid? What do you have to make sure you don't buy?
So quality of business model and balance sheet are incredibly important in both those sectors. So in terms of quality of business model, in the energy sector, think about companies that have a lower than average cost of production, companies that can survive and break even at low oil prices. Those companies are going to make it to the other side of the valley. In the banking sector, think about companies that have good pre-provision earnings, the money center banks, for example, the trading activity that's going on right now, raising debt and equity financing, that's really helping to offset credit losses. And then balance sheets are critical on both sides. A strong balance sheet will give companies the wherewithal to make it, again, to the other side of that valley, whether that's high capital ratios for banks or just low debt levels at the energy companies.
Tony, downside surprise on some of the data today, disappointing initial jobless claims, moving to the upside in a way that certainly we don't want to see. Many people expecting a serious test to this recovery, maybe in the next 30 days or so. Do you think this equity market is primed for that?
So a couple of things. One, if you look at the City Surprise Index, that has been remarkably strong. We were near an all-time high. We hit an all-time high this month. We've come off a little bit, and that's to be expected because we've seen this rise in cases. But the cases look like they're starting to roll over, so I would expect the economic data to resume in a positive way. Also, the market has a lot of support from policymakers, the monetary authorities. You've heard that earlier today. Also, we're looking at a fifth package coming out of Congress shortly here. That's a lot of stimulus. Also, there's just a lot of money on the sidelines. That plus low interest rates really provide a cushion for the market, if you will.
Tony, mood matters, and the mood right now is glass half full. It's been that way for quite a while. We're experiencing a little bit of tension over the fiscal package, no real tension in this equity market. What would it take to change the mood, do you think?
Yeah, if you want to think about what to be cautious about, certainly you got to watch the virus carefully. A big second wave could be detrimental to the market. You also have to watch policymakers. Will we run out of our appetite to keep stimulating, to keep expanding the deficit? Those are the two worry things on my list.